Welcome to TheoTrade. This is Don Kaufman. Here we are. It's May 1st, 2017. I'm watching the S&P futures up about 8 handles with still about 40 minutes left in the trading day. But, figured I'd record a little bit earlier today because, it's holiday trade in many portions of the world, which has really diminished overall volume here in the U.S. Not only in S&P futures, but really on through and through on the marketplace. If you're looking at the S&P futures now, again, we've got about 40 minutes to go to the close. We're at 687,000 contracts. I mean, on a busy day, you come in the morning and there's that many contracts. Moreover, if you take a look at bonds, the bonds are backing off some 26 ticks, 32 ticks to a 1-point move. Yeah, but the bonds are trading 190,000 contracts today. Again, less than stellar volume inside of trade today. Though I can make some arguments the bonds are kind of getting it done. The bonds actually backed off to the 152 level. The 152 handle specifically is critical inside of the bonds. Okay, the 152, or below happens to be extremely bullish for the S&Ps. Okay, more so than they already are. That is, if the bonds start to break below 152, I'm thinking, wow, and again, I have no problem drawing on the chart. If those bonds start to break down back into this, 149 kind of handle, that could really fuel the next leg up on the S&Ps. Okay, and specifically, I'm not just watching the S&P futures, and I'm not just watching to see if we crack through 2,400. Really specifically, and I mentioned this in the weekend video, and I'll reiterate it now, the financials, okay? If the financials, which crested into the 24 level just last week, if these financials crack back above the 24 level, along again with the bonds breaking below 152, to me that's a signal that, again, I have been bearish for a very long period of time, and you really have to consider, hey, that's not good. That's not good if we crack above this 24 level inside of the financials, because that could allow the S&Ps to run straight to, then you're talking about numbers in the 2450 kind of range in no time at all. Now, let's get to what's important right here, right now. Again, everybody is going to be, all Apple centric right now. First and foremost, Apple today breaks into all-time highs and does it in quite spectacular fashion, up about 2%. Right behind it over here on a percentage basis, I should say, right in front of it would be the proper, terminology here. But we've also got Amazon cracking into all-time highs today on a stellar 3% gain. But the reason I'm really looking specifically to Apple, everybody knows they have their earnings coming out. It's tomorrow. It's Tuesday, right? Here it is, Tuesday after the bell. And if you don't recall, Apple is unlike many of the products over there. They wait about 15 to 20 minutes after the closing bell and then release the earnings. Because, I don't know, it's anticipation, right? It moves the Nasdaq futures a substantial amount. But look at the Nasdaq futures today. They're up almost 1%, okay? Can anything get in the way of the Nasdaq futures in this just monstrously parabolic move? Well, yeah, there is one thing. It's called Apple, okay? Now, regardless of what you think over here, you need to come into all earnings periods with a very, very open mind. And when it comes to Apple, one thing that they're going to likely discuss in Apple is that the company is going to be sitting with $250 billion in cash. Okay, and that's probably going to be announced on the earnings, which is absolutely stellar, because just to give you some perspective, $250 billion, that's more than Walmart is actually worth in market cap. That's how much cash Apple actually has. Apple could write a check for Walmart, but why would they want to? Anyway, if you're taking a look at Apple and you're thinking about, different trades for Apple, well, I have an interesting one to consider. Apple is going to be, and everybody recognizes this, it's a 50-50 bet. That's what earnings are about, especially in respect to the fact that Apple has had this monstrosity run-up prior to earnings. Listen, if earnings are good, then all of this upside was worth it. right? Since the last earnings period. In the last earnings period, we were at 120. Now we're at 146 on a percentage basis. You got to start like questioning things. Again, from the previous earnings, it was up like 13%. Now it's up 38%. Again, if you take a look at Apple, and bear with me here for a moment, on a year-to-date chart, it's up 26%. It's the largest market cap in the known universe, okay? And it's up roughly 26%. Actually, I should say this. It's the largest market cap until the Saudi oil company goes IPO. That could be interesting. Anyway, at this point, it's up 26% year-to-date. Doesn't matter what you think, but the one thing you have to realize, there's about a $5.27 expected move. Volatility is elevated. Here's my trade inside of Apple. It's going to be in the spiders. And you're like, what? Yeah, I'm not actually going to place the earnings trade in Apple. Because to me, to take the bet in Apple, listen, what's the bet? All right, it's a pretty simple one inside of Apple. You can get bullish, you can get bearish, you can get neutral that we think we're going to stay in a $5 range, or neutral we think we're going to move outside the $5 range. Well, I got a better one for you, okay? Apple, I think, is going to rock markets, not just the Nasdaq, but the S&Ps as well. And I have been buying straddles both in the, Wednesday expiration and the Friday expiration. You can see I'm carrying positions on those. And yes, I've been buying straddles. Let me tell you why, and why this is my Apple position. So I'm going to close up this left side bar. So my spider position, I'm doing it Apple, and a number of reasons. First of all, this is a Wednesday expiration, okay? Here's a Wednesday expiration. Why am I buying, all right? And I actually bought the 238, okay? But my 238 straddle that I bought, it's already profitable. Right now, you'd probably be looking at the 239 straddle, okay? Right now, you'd probably be looking at the 239 straddle. Yet, we're already coming in to the close of Monday, so we're going to look even further out in time, and I'll show you that trade in just a moment. First of all, the Wednesday straddle, it's trading for about 98 cents. That's the equivalent of the S&Ps. You have to ask yourself, are the S&Ps capable of moving 10 points? Well, they did it today. I mean, they move like 10 points almost every day, but they did it today. This would give you between now and Wednesday for the S&Ps to move 10 points. Apple's earnings could be enough to really shift markets higher or lower. But in addition to just Apple's earnings, you realize you also have an FOMC announcement. Now, why do I like that? Because the implied volatility is not going to drop off until after the Yellenator comes out. So do you have 97 cents of risk? Kind of. Do you have 97 cents of risk? Well, yeah. But for you to lose even half of this would be almost difficult. The only way you could lose the full 97 cents is if we fell at 239, on Wednesday afternoon, which absolutely could happen. Nevertheless, you could just bail out of the trade even before the FOMC announcement. Now, if you don't like just to Wednesday, and by the way, you're going to get the most bang for your buck. If Apple does something spectacular or Apple actually misses big, you're going to get the most bang for your buck on the Wednesday. But I also went out and I started buying, the Friday. And you can see earlier today, I bought the 238.50s. But at this point, we're a little closer to 239. So if you look at the 239 trade, it's trading for like $1.44. So the at the money straddle is trading for about $1.44. Now, why would I want to buy that one? Well, here, again, this implied volatility, it's not going to drop off. Not even after the FOMC announcement. Why? So you have Apple, which is a huge announcement that could rock markets. Then on Wednesday, we have the Yellenator. And then on Friday morning, what's that? It's the jobs report. We got ourselves a situation. It's an employment situation. So it's not likely you're going to see the implied volatility drop off until after, the open on Friday. So for $1.44, all you need is a 14-point move in either direction to be able to break even. A 14-point move in the S&Ps, which is the equivalent of $1.44 over here in the spiders. So again, I'm looking beyond the obvious like Apple trade. I'm buying really dirt cheap premium in the spiders to try take advantage of what's going on, not only in Apple, the FOMC, the employment situation, because frankly, this week, there's not a whole lot going on in terms of implied volatility, but there are some very large announcements going on. Also, keep in mind, if you do this Friday straddle, you do have the likes of Facebook out there. They're going to release Tesla. I don't think Tesla's going to be a big market mover, but everybody wants to see destruction of the Tesla at this point. Stay tuned for much more. Again, Apple after the bell tomorrow. I'll be long options. Strange thing for me to say, but I'll be long options into it. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.